Hello, this is Joe Pryor of the virtualrealestateteam.com in Oklahoma City. Periodically, I like to talk to investors because I get a lot of investors from out of state. And they say, what kind of a market is Oklahoma City? And normally they're saying, well, is the economy good? And, is it something that I can feel comfortable in investing in? I've never heard of Oklahoma City, or maybe I just read an article about it. And normally, before I even get into that, I want to talk to them about the three types of markets that are out there for investors. And I've done this before, but I think it's good to kind of revisit it from time to time. And there are three kinds of markets. There's that stable linear market. On the other end of the scale, there's the volatile or cyclical market. And then in between, there's what we call a hybrid market that exhibits kind of both kinds of markets from time to time. Now, I'm going to use three cities to illustrate these. I'm going to use Oklahoma City for the stable market, Phoenix for the hybridized market, and Orlando for the volatile market. Now, a volatile market is Florida, to a great extent, and California may be all that type of a market too. It's, there's population growth, there's population decrease, there's more of a possibility for things to go wrong. Real estate tends to move too fast, as we saw in the Orlando area in the first part of this century, and it had upwards to an 80% meltdown in areas and surrounding areas to Orlando. And so the thing is that it is really a critical place for you to buy right. In other words, you've got to buy timing. When you're talking about the Orlando market, you've got to make sure that you're not on the high, because even those people that got 20% down loans in 2005 ended up being hurt in 2008. So you don't want to be there at the wrong time. Now, if you're a rehab and reseller, these are the kind of markets that you want, because you need a bigger margin than even an investor does, because you're looking for a profit up front. So volatile markets are really good for rehab and resale short-term investment. Now, the second type of a market is our market, which is linear. If you look at the last 14 years of Oklahoma City, even during 2007 to 2010, what you saw is no high highs and no low lows. You see it pretty much steady. You might see it decrease a little bit because 2008 and 2009 certainly was a recession, but you didn't see any meltdown. Now, at the same time, our recovery was, well, it was a very fast recovery, but it didn't blip up 10% or 20% like you used to see some of these markets do. It may be 1%, maybe 3%, but it's the kind of market that has this marvelous stability that you can really believe in. And then you have Phoenix, which has periods that will go linear like Oklahoma City, and then they'll have these huge spurts that'll go on, and then they'll have to do a market reset and recover. So it's kind of a straight line and then a zigzag up and down type of a deal. So if you're an investor, our kind of market is your long-term market. It is the place to go when you want a steady rate of return, values that you can believe in, low vacancy rate, and low risk. On the other hand, if you're a short-term investor, you're looking for the volatile markets. And if you're looking in the Phoenix market, boy, you talk about something that really needs some really great timing, because you don't want to be on the zigzag. You want to be on the linear. And this is why I have investors more and more again looking to the Oklahoma City market, because we are your conservative, low-risk, linear, dependable market. And you know something? That's not sexy, but from a rate of return and your pocketbook, it's really terrific. This is Joe Pryor of the virtualrealestateteam.com in Oklahoma City, where we deliver traditional real estate values at the speed of technology.